Basically, we continue to like Indian hotels from the hotel sector. I think in the budget this time, clearly there has been a clear focus on domestic tourism. About 26,000 crores have been allocated. And I think Indian Hotels is one of those companies which is a market leader and which has got a very good geographical reach. My sense is that definitely Indian Hotels also will benefit significantly, not only from these announcements, but from the fact that tourism sector continues to do well. So I think our call is that even at current levels one can accumulate. One could look at a price target of around 775, 780 over the next say 12, 15 months. And the other stock which is interesting and which is operating in the gold jewelry space is Senco Gold. I think very strong numbers for quarter one. Plus the kind of duty rates which have come down on gold has actually made the company give a small commentary saying that possibly 10 to 15% top line growth could increase. So I think, despite the fact that today the stock is seeing a little bit of pressure, Senco Gold could definitely be a good representative if one wants to play the branded gold jewelry market. And I think around levels of 1200, 1250 look very much possible if one were to hold for the next, say, 12 to 15 months.
Mhm.
Yeah, I think numbers from Axis Bank have been disappointing, and I think deposit growth rate has slowed down. There's no doubt about it. But I think some of the good banks which have reported strong numbers have been RBL Bank, or typically if you could look at the public sector banks like Bank of Maharashtra or typically Union Bank, UCO Bank. So I think we cannot say that the entire banking sector is now going through a challenging time. Although deposit mobilization is a challenge, banks are now finding it equally tough. But my sense is that maybe if the bank is able to recover post this quarterly number and improve the net margins and obviously improve the numbers, then I think clearly Axis Bank is a large bank. Clearly, one quarter number is not going to change the story. In the very near term, I think most of the public sector, private sector banks have gone up quite significantly. So I think there could be some profit booking also to that extent. But I think better banks would be the PSU banks. We are more positive on banks like Bank of Baroda, State Bank of India, the smaller PSU banks like Bank of Maharashtra, where I think the risk reward is clearly much better. And I think within the private sector banks, the smaller banks like RBL Bank, deserves a second look. In fact, today I believe there was a block deal. So I think clearly, it's going to be a pick and choose. You have to be selective. Maybe some of the banks may underperform, but the broad underlying story is very strong. I think with a capital expenditure of almost 11 lakh crores and with corporate capex likely to further gather momentum, banks are not going to find any shortage of kind of business. But I think the key would be the cost of deposits, which I think is going to obviously impact their net interest margin. So I think it's going to be a pick and choose. We still continue to be long-term positive, but yes, in the near term, you could expect a little bit of volatility if the quarterly numbers don't come up to expectation. You're right in saying the liquor companies have done well. I think both Radico Khaitan as well as United Spirits, I think these are companies where I think any dip should be used to accumulate. And I think clearly we are seeing not only a rise in volume, but even a better pricing kind of picture for most of these companies. And I think after a very long time, I think domestic, consumption themes, especially the liquor companies, are doing well. I believe that FY25 should be significantly better for them. Normally, the second half is much better. But definitely, I think volume growth has been much better than what the street expected. So obviously, that is a key positive indicator. And I think with new product launches by most of these companies, I think you're going to see a lot of excitement around these stocks. As far as Allied Blenders is concerned, it's a new stock which has got recently listed. So I think we don't have research coverage there. But my sense is that after a couple of quarters, once the market gets a hint as what is the growth trajectory, what is the product lineup, I think probably this stock should also do well. But I think clearly the front runners would be Radico and United Spirits, where we have a positive view, and we believe over the next say 12, 15 months, one could definitely add these in their portfolios for a reasonably good risk reward. Neeraj, we do track the company, but I think this is clearly a big disappointment. I think there were expectations that the market was expecting. Our analyst view was that we could see some improvement in the EBITDA margins. I think clearly the markets are waiting for the operating leverage to kick in, which is yet not coming. And I think possibly the second half of FY25, we hope that some improvement could come in, because clearly there's been a very long wait. The company has made a huge amount of capex, but I think the capex has not yielded the kind of top line and the kind of revenue fructification which most analysts have assumed in their numbers. So I think as of now, no fresh buying is advised. we have been telling our clients earlier also that this is a stock which could possibly outperform, only when the operating leverage kicks in, which is yet not started. So I think as of now, it's a hold. I think no fresh buying, advised at the current. Pretty solid and impressive. And I think, as long as they add to capacity and they execute, their order book quite smoothly and aggressively, I think you're going to see this stock, getting further re-rated. I think the markets are now getting, used to the fact that once the narrative is already in place, if it is supported by good data points, then I think it won't be surprising, because, in this space, ultimately it's execution which matters. And I think in terms of execution, Adani Green has done a commendable job. So my guess is that FY25 should be significantly better than last year. I think, we'll have to wait for some commentary, from the management post these numbers. But I think once the commentary comes out, I think, the markets will definitely get a better feel as to what's the kind of outlook the management would like to share for FY25. So I think net, any decline, the Neeraj, in this stock would be a good opportunity to accumulate. The stock has moved up quite significantly. So I think we would be buyers, on declines. Yes, I think from a portfolio perspective, over the next, say, 12 to 18 months, visibility looks to be pretty solid. I think clearly, numbers have been much better than the street expectations. And you're right that the larger FMCG players have been struggling, very tepid top line growth, almost flattish profits or maybe negative turn in profits. So I think, in terms of the size and in terms of the kind of opportunity Jyothy Labs is targeting, I think it's got a unique positioning. My sense is that, hopefully, if volume growth becomes double digit, and the price improvements do take in terms of price increases, which we feel possibly in the second half looks possible, then I think you could see further re-rating, because, in terms of relative valuation, it still trades at a discount to the larger FMCG players. But I think, yes, I think clearly somebody who's taking a 12 to 15 month view, and considering the fact that this year monsoon has been good, the rural India pocket is also going to throw a decent amount of demand. It would not be surprising to see these kind of smaller set of companies doing well. And I think we'll have to wait and watch for at least a couple of more quarters to get a certainty on the top line growth and the profitability, kind of, trajectory which the company has shown up till now. Yeah, I think within the pharma pack, after a long time, we've seen some uptick happening. A lot of consolidation happened. And I think in terms of numbers, my sense is that, US focused companies, I think specifically as Rajesh mentioned something on Sun Pharma, typically a Torrent Pharma. Cipla also we are pretty positive, but we would like to await the numbers and the management commentary before, taking a call. But clearly in terms of Sun Pharma, which is a well established player, and has got a good specialty division, I think the scope for some sort of, margin enhancement always continues. I would believe that, one has to be selective and be stock specific here rather than betting on the entire pharma pack. Few companies which qualify the bill are obviously diversified companies. So Torrent Pharma, despite the fact that today, the stock is down, I would say that, somebody who wants to take a slightly medium to long term view can definitely consider it. Has got a large US exposure plus a good domestic market. So Torrent Pharma, Sun Pharma would be better, or even the pharma I think has disappointed. I think the numbers have not been all that great. So we'll be a little cautious there. But overall, I think the pharma pack is going to see a lot of value buying in this kind of market, which has risen quite significantly. So I think, markets are also now getting into more of defensive categories where the risk to capital is minimal and where the opportunity to grow your capital is reasonably good. I think clearly, I think hotels will also like Lemon Tree. I think Lemon Tree is also one of those stocks where we feel over the next, say, 12, 18 months, the expansion effects would get rolled out. Clearly, of course, the balance sheet is going to get slightly more leverage, but I think looking at the kind of room capacity they're adding, I would not be surprised that, on declines, this is also one counter which one should accumulate, because we believe that even in the current year, the room ARRs are likely to increase, and there is a supply crunch even as of now. And with the tourism market being supported by the government, even Lemon Tree is looking at, building up sufficient domestic capacities in, temple kind of related spiritual kind of destinations, where I think the government is also giving some sort of tax incentives, some incentives for these players. So I think, clearly if you have a slightly longer term kind of long portfolio, I think Lemon Tree and Indian Hotels, even at current levels, can make a decent amount of money, because here the story is intact, at least for the next 12, 18 months.